to financial well-being and the menopause. Okay, thank you all for joining us, taking the time out for your well-being, but also to support the conversation of menopause in the workplace. Let me hand you over to Neil at this point, and I will be back with you very shortly. So over to you, Neil, and thank you.
Thanks, Carla. Hello, everybody. Good afternoon. And as Carla has suggested there, yes, we'll be talking about financial well-being and the menopause. And anybody who knows anything about financials, it's all very encompassing. So in the space of 30 minutes, I'm going to try and get across as much information I can possibly get across to yourselves in that period of time. My name's Neil Howchin. I am a chartered financial planner, but because I am a chartered financial planner, I am fully regulated by the Financial Conduct Authority. So I just need to go through a couple of disclosures first. Today, the hat I'm wearing is the Eulogie education hat, which is this side of the screen, everybody. That is all about well-being. That's all about financial awareness. We've been supporting the NHS, public sector and private sector now for 20 years. Today, everybody, it is awareness, it is education. Please do not walk away from here thinking I have been given absolutely specific financial advice, because I haven't given you any financial advice today. That is the hat I wear when it says TWP. So just bear that in mind, please. Caveats, as I've just said, this is not advice. I will be using some stereotypical scenarios later on in the webinar, because there's a few things I'm trying to get across to you. So virtually, you can start imagining what's going on and start painting pictures in your mind, because a lot I'm going to be talking about may be impactful straight away and immediately. Certainly towards the end, though, of the webinar, it is something that's going to pretty much going to affect many of you if you're coming up to retirement decisions, etc., etc. All right. So without further ado, let's open it up. And if some of you have seen me already present, you will see some of these slides and how there's a bit of a crossover, but it's exactly the same kind of message. What we're trying to get across to you is education. All right, we are trying to give you all the tools possible so you can make absolute, rational, non-biased decisions about your financial well-being. And not only should this be relevant just for the NHS people, this should be relevant to your partners and spouses, regardless of gender, because everything I'm getting across to you today is absolutely all-encompassing. It's legislation. It's also, we all have our own feelings. We all need our own well-being, which is on the right side of the screen here. Well-being, everybody, that's really a lot down to our behaviors, our habits, our thoughts. We know how what gambling can do. We know what alcohol can do. We know what cigarette smoking, overeating, etc. So the education's there, but sometimes it is up to ourselves to start making those right decisions. But from a financial perspective, in red, what I've highlighted there is financial well-being. And this is the definition of this, okay, is financial well-being is about feeling secure and in control. It is knowing that you can pay the bills today, can deal with the unexpected, and are on track for a healthy financial future. In short, confident and empowered. Well, I'm sure many of you may not be in that position right now. Some of you may have done and fallen out of it. Some people are striving to be there. And what I'm going to be showing you later on, it is a bit of a roller coaster with the financials. It is about a relationship with money. What I really want to cut across to you as well is this herd mentality. We've been doing this, as I've said, for 20 plus years now, up and down the country. And the NHS, there is no doubt about it, the NHS have got the gold award for herd mentality. What does that mean? That means that you will listen to what your neighbour has to say. You will listen to what people in radiography, catering, A&E, assistants, it doesn't matter. You will listen to what their view was on their pensions, their financials. And we only had somebody last week who actually came out of it and said, Neil, I got actually financial advice off my neighbour. Do they know anything about money? No. Do they know anything about your pensions? No. Do they know about your mortgage, your debt, your children, your savings, your partner's income, your spouse's income? No. So please, whatever you do come away from today, please make your own decisions, and you will highly likely need some support, and that's not coming from an advisory perspective. That could actually come from a third party, but a mutual, a non-biased third party. So please make your own decisions. Bring spouses and partners into the fold as well. So relationship with money and finance. we all have a relationship with money. And actually, I think this is kind of impactful, that the sooner we understand as people what our relationship is with money, the better we can start diagnosing ourselves and start having a better trend and a relationship with money. Now, relationship, like any other relationship out there, will at times be turbulent. We all have friends, colleagues, partners, ex-partners, distant cousins, uncles, siblings, etc. It's all very rocky. At times, sometimes it's very nice. It's all lovely, but we've got to start understanding what relationship have we got in the here and now. Is it a great one? Is it excellent? Is it volatile? Is it a bad one? As soon as we understand that, we can then start having a better understanding, and we can bring that relationship to the fold and start making the right decisions. Am I making now decisions based on the way I'm feeling? If I'm feeling downbeat, am I going to order more food and more clothing to make me feel good? Do I? And it's understanding that type of relationship. All right, we need to understand how we can handle that. And life events, without a doubt, will have an impact. And there are many life events here that many of us have already experienced, will experience, and going through at this present time. I personally lost my father in June, and that caused certain life events, and how I see money and how I dealt with certain things from a personal perspective, it gave me some brain fog. So actually, our life events will actually have a reminiscent effect, have a ripple effect on what we're going to do next. Hence why third-party, non-biased views coming in play. And so, like anything with circumstances, not only do our relationship with money fall out of it, maybe, but our emotions. And our emotions can be up and down, up and down. And I think the biggest example of emotion and money is gambling. I live by Cheltenham Racecourse, and I can see a lot of Irish, certainly around the week of March, and I see elation. I absolutely see maximum elation, but I saw absolutely depression, and that can happen in the space of 7 minutes of a race of horses. So that's the gambling side of things. Now, I'm not going to go into any of that today, but emotions do have a big part to play, and that could be driven by, as I've said already, these circumstances. And many people, like for example, we're talking about the menopause, many people going through the menopause and thinking about retirement at the same time. That alone, those two can actually have havoc on our mindset anyway, and that's a lot of emotion, a lot of stress, because then we've got to go to work, and then we've got COVID on top of that, and how we're dealing with that, and then all our family lives, etc., etc. So you can now begin to see how this can have a knock-on effect. So what the regulator is, the Financial Conduct Authority, and there's a lot of now studies coming out, which has been in vogue pretty much for the last 10 years, but really, really gaining traction, which is a good piece actually from the regulatory world, is behavioural finance and vulnerability. Behavioral finance, everybody, it is all encompassing. And as I've just said, our relationship with money can be like this roller coaster effect. But the statement for behavioral finance is, it is the understanding of the psychology and the influence of investors or financial analysts. It tries to identify why decisions being made may not always be rational and can be influenced by own biases, environment, and can have limits on their self-control. Please do not see influence of investors or financial analysts, you're coming from a big city of London, so to speak, and working on Wall Street or anything like that. No, please remove that. Actually, you are a financial analyst the minute you look at your total reward statement and you're thinking, am I going to take my large lump sum or my low lump sum? You're a financial analyst. Are you looking for a bigger interest rate, lower interest rate, a mortgage, higher borrowing, lower borrowing, etc., etc.? So please take it in that context. But what I really like about this bit is the rational, the own biases. And again, I will try and get across, if we're focused on the menopause and ladies, then actually, is your partner or spouse actually the right person to give you advice? Because actually we do see, working in a professional environment, that sometimes partners and spouses will just agree. They will just nod to just to get on with life. Actually, that's just as bad. That's just catastrophic as it can be. Hence the third party environment, friends, family, somebody that has got a non-biased view. Excuse me, whoever, if you can just put each other on mute, that'd be grand. Thank you very much. Good financial behaviours, establishing measurable and achievable financial goals. I've highlighted that in red because I have a lot of people at the age of 59 wanting to have a £15,000 a year pension, but they've only got £30,000 in pensions. So what we're trying to say here is, have your realistic goals, make them realistic. We have people that actually don't realise what they've got until they get looked at, and actually could have a great lifestyle, but they panic because they didn't know they could afford it, because they don't really know what they're looking at when they're looking at statements, pensions, etc., etc. And vice versa. You have like kind of managed expectations. You haven't got it, so please do not think you can have that type of lifestyle unless there are serious kind of savings going in place. But good financial behaviours would be tailored actions to make them work. Understand your own budget by regularly completing a budget planner, so an income and expenditure exercise, an emergency fund of about 3 months worth of net pay. Maintain your property and personal insurance, maximising all staff benefits and employers' pensions. There's a lot of there, and what that is all about, that's quick wins. A lot of this you can do yourself. You can do your income and expenditure. You can check out your insurance policies. You can see if you can get a better rate of your mortgage. But staff benefits, the NHS, we do a webinar on staff benefits. You've got some fantastic benefits, and your pensions within the NHS are just amazing. Income, you've got a good income plan as well, i.e. 6 months full pay, 6 months half pay after 12 months service. So vulnerability. This is the regulator. This is our Financial Conduct Authority. This is our regulator. And I must admit, in the last 20 years, a client that was classed as vulnerable, it was really down to kind of the 3 Ds. It was death, divorce and disease, and then if you had any of those, you were classed as vulnerable. Look, gratefully, actually that's expanded massively in the last couple of decades, and in recent years certainly there's been a great press on actually what is vulnerability. I only this morning was on a webinar. My life is full of webinars, no doubt, like yours, and it was actually, should we all be classed as vulnerable based on COVID? Are we all really making rational decisions based on our anxiety? We know Wales, for example, is just imminently going on to a lockdown from Friday. So the people out there, are they making the right decisions when it comes to finances? So it's kind of pulsing those questions out there. And so although this is all meant to be about, just say, for example, the menopause, what we're trying to say here is actually, look, it doesn't have just to be the menopause. In fact, we can have so many different factors in our life that can enhance that and make ourselves have unrational decisions on this. So the drivers of vulnerability, the 4 key drivers would be health, i.e. disabilities or illness that affect the ability to carry out daily tasks, life events, such as bereavement, job loss and relationship breakdown, resilience, low ability to withstand financial emotional shocks, and capability, low knowledge of financial matters or low confidence in managing money, and low capability in other relevant areas such as literacy or digital skills. This is fluid. This is fluid. It doesn't mean just because you've endured, for example, it doesn't mean that I'm still now in a vulnerable position, maybe. So this can change. And this is why talking to people, having a third party, especially having spouses, partners and close ones involved, friends, family, actually, when you're making these type of decisions, it's absolutely all crucial. It removes Chinese whispers. It impacts a second opinion. But as I said, it's that non-bias approach, and this is a fluid state of mind. And this is something, everybody, that we've all gone through from day dot to the present day. We will all have had some sort of emotional change like this. Behavioural characteristics would be treated normal, but you're not thinking rationally, influenced by own biases. We see a lot of that. Actually, you only read the information you want to read to make you feel, yes, I'm making the right decision. However, we don't listen to actually what could just be, not trying to rub you up the wrong way. They're just trying to say, look, have you actually thought about this? Limits to self-control. Confidence outweighs ability. We come across that quite often, to be honest. People do a lot of DIY on their own finances, and actually it is confidence. We've got to be doing our own, building our own kitchens and bathrooms. Have we got the skill set to do that? Emotions, we've really touched on that. Are we making rational decisions based on our current emotional state? And that old adage, just sleep on it, sometimes can actually probably save you hundreds to thousands over a period of a lifetime. So social influences, there's a lot of that going on. If anybody's watched that Netflix, the the dilemma, the social dilemma, I really encourage that you watch that program, especially if you've got children or grandchildren. Story media reading, yeah, keep yourself up to date what's going on out there, obviously with the climate we're in right now, but be very conscious about the fake news environment. One-way confirmation, pretty much what I've just meant about influence by own biases. Are you interacting with other views or state of minds, or are you absolutely concrete? That's what I'm going to do. But why are you thinking that way? Loss aversion. People won't invest money. Why not? Because you think your money's going to go down. Is it really going to go down? but I'm going to leave it in cash. Well, cash, actually, right now, you've got inflation for the last 12 years. Inflation's been higher than interest rates. So actually, you're guaranteed to have a loss aversion account. But you do need to make sure you've got some cash savings in play. And herd mentality, we've touched about that. Be very conscious of where you're getting this information. As I've said, do they know the ins and outs, your aims, your objectives? What do you want now? What are you planning for 5, 10, 15 years plus time? What legacy do you want to leave for the family? What inheritance tax problems, capital gains tax, income tax, all those scenarios. So please, please seek the right assistance there. Now, when I mentioned about what happened to myself in June, and one of my colleagues said to me, mate, that's his words, mate, you're going through brain fog. And I was thinking, well, what's brain fog? So I would look it all up, and absolutely spot on. And in fact, I was surprised I could even find on Google what brain fog meant, because I just thought it was just a term or phrase. But no, it is absolutely out there. And look, it can, symptoms, insomnia, anxiety, fatigue, irritability, depression. Some of those, yeah, definitely had. But what are the number of causes? Lack of sleep, diet, hormonal changes, medical, life events, stress, anxiety, depression. So again, this is a fluid thing. It doesn't mean now you've got it, that's it for the rest of your days left. You know, and some of us would have gone through this already. You come out of it the other end, like life, unfortunately, something comes up again, and that can actually be like a building block. And like a game of Jenga, sometimes it can just all collapse. So we need to reach out to the right authorities, the right people. And I've listened to a few of the webinars over the last couple of days, and you know, I think it's all about support driven, which is absolutely a fantastic thing. But our financial behavior really does have an impact on the way we will lead our lives later on down to finances. And we know factually that actually personal and working relationships are affected by money. Physical and mental health is affected by money. And one of the biggest causes, if not the biggest cause of mental health, is down to money, because of a number of circumstances, which I've listed earlier on, can drive that. So the sooner we understand, number one, our relationship with money, number two, who are we speaking to, make our own decisions, non-biasism, and understand where we are as a person, actually, the sooner we can start getting out of this and actually start putting the plasters on, mending ourselves to get the right assistance for the right financial decisions you do. There's a lot of things which we're going to be touching on in a minute, that if you make the wrong decisions will have an impact on your financial health for the rest of your days. So we need to make sure we're doing the right things. All right. And this, being human, some of you would have seen this if you've been to one of our webinars already. I'm a big fan of this. I think this is just absolutely proves who we are, and we are human. And again, as we've illustrated, yes, the menopause, absolute fact. Yes, it's there, and yes, we can have all these emotions with that. So I've just come off a webinar with David and talking about the male influences on that as well. What I'm trying to spell out here is, please, if you are in any of these positions, that's just being normal. That's being normal. But what we do know, that this is a marathon and not a sprint. Nothing happens overnight. It's actually making sure that we actually, say, from the emotion and fear side of things, we start accepting that, and then start asking for the right support, etc. We have that realization, that energy. But again, it's a fluid movement. So what I've been asked to do, and this is where we've seen a lot of correlation, to be honest, is with menopause and decisions of retirement planning within the NHS. So I really wanted to kind of have a good 5 to 10 minutes on this one. And I know we've got time actually on our side, is actually where I've just talked about some of the financial decisions you may make will have an impact for the rest of your days. This is where we really see it. And actually, there's a lot of people I've spoken to, say, for example, back in 2016, 2017, we talk to them, we go through certain options, and that's that. And then latterly, you have contacted in 2019, present day, saying, I'm glad I've listened, or I wish I had listened. And a lot of it is actually can be around the menopause course. And so that's actually what I'm going to be running through now. Some of you online, or many of you, would have heard the concept of retire and return. And this is all about how you're going to start applying for your pensions within the NHS. Retire and return, everybody, is a factual concept. It's there by the NHS, and it is an option. But actually, personally, and coming from outside in, as from a planner's perspective, it's a very final solution. And with anything, there are pros and cons. But remind ourselves, where does retire and return come from? You may just see it as you retire from NHS and then get your pension income and return to work for the NHS and get an NHS working income as well. Actually, what caused this was actually, and again, this is where it's very reflective of the ladies, is simply you retired on your 95 scheme at age 60. This is history now talking. But at the same time, at age 60, what else could you do as being female? You could actually claim for your state pension as well as. So not only now did you have your NHS 95 pension scheme coming in, you also had your state pension coming in. You combine those two together and you could afford to retire. You then returned to work because actually it was something to do. Maybe you did need some money, camaraderie, but you didn't go back to five days a week, for example. It was there because you actually enjoyed the people, and that was my communication with the people, with the ladies at the time, and we're going back a fair few years. But the words retire and return are still in. So, like with anything, when we come to retirement, are you retiring because you can retire, or are you retiring because you want to retire? And that's where we've got to be careful, because actually we have a lot of people coming back to us saying, Neil, I have to go back to work. I can't afford. Now, if anybody wants to retire, it's because you can afford to retire. If you go back to work, it's because you want to go back to work rather than you have to go back to work. And that's where we've got to start now thinking about retirement return. If you do any decision, and I hope anyway, by driving what we've talked about today, we do an income and expenditure exercise. This is the cornerstone of financial planning, everybody. Understanding what your income is versus your outgoings. And we are going through a heavy period. We are through a recession. There is some bad news still to come in the economic world. And although, yes, I'll predominantly be speaking to NHS and public sector today, remember that your partners and spouses probably, rule of thumb, highly likely going to be in the private sector. And if they work in the hospitality, aviation, engineering, the consumer delivery type environment out there, the sectors, it can be quite a bad news story out there. So actually, it could be that you just need now to be mindful. Have we got our head below the parapet? Have we got enough emergency money? Our core expenditure, top right-hand corner, that's where you've got very little wiggle room. Mortgages, debt, food, utilities, commuting costs maybe. Maybe there's not much wiggle room. Your discretionary spend, like your gym, media, technology, bigger holidays, more meals out, some of that you can't do because of COVID, right? Some people are seeing the benefit from that actually. But understand what your income and expenditure is. There's many people we speak to within the NHS that don't actually know what income they actually earn. So how would you understand what you're spending out? So please do this exercise. But going back to retire and return, pros and cons. Look, the pros are about keeping within a position. Within your work and within the NHS, you've got a permanent position. You have your death in service. You remain in the NHS pension schemes, which are very, very favourable pension schemes. After 5 years service, you get 6 months full pay, 6 months half pay. So that's your income protection type plan for 12 months. Regular work and income, then you can begin to budget. You're in financial control. Humans, by instinct, like to be in some form of control. But actually, you might retire because you want the tax-free lump sum. You want to work less hours. Don't let the tax tail wag the dog, as I've highlighted there. Are you getting that tax-free lump sum just to make your cash account look very nice? Or are you doing it for absolute? If you're going to retire, is your pension income sustainable? We have many people coming from a 40k salary to a 10k pension. We do this income and expenditure, and actually their eyes begin to widen, thinking, actually, Neil, I just really can't afford to retire. Are you going back to a permanent position? Or are you going back as a contractor? Are you returning to work because your pension income is not sustainable? Are you retiring for a tax-free lump sum? Is it to pay off the mortgage, or is it to pay a debt? That does make sense. Sick pay benefit will be reduced, potentially no death in service, and you may lose career control. So we've got to be very, very mindful. Retire and return, although do not rule it out, entertain it. But there is something else I would love you all to entertain beforehand, and that's called winding down. Winding down, in essence, is part-time work. So what is it? And again, this is absolutely an NHS flexible retirement. But if you go straight to retire and return, you can't do winding down. But you can do winding down first and then decide to do retire and return. So I would definitely ask you and suggest you look at this option first. What is winding down? I've set an example. Janet is in the 95 scheme and works 37.5 hours a week. She's a 5-day weeker. Janet's full-time equivalent pay. Now, remind you what I've just said, full-time equivalent pay. She earns 40 grand a year. The 95 scheme is based on the best year of your final 3 years to retirement date. Janet, though, she's had enough. She only wants to do 2.5 days a week, make it a 50% work. So therefore, she decides to wind down, go part-time. She is now earning £20,000 a year. Now, the common belief out there why people don't entertain this is because she's gone down to a £20,000 salary, she generally thinks that's going to be based on the best year of your final 3 years. No, it's your full-time equivalent. So actually, Janet, even though she's earning 20,000, her full-time equivalent on her total reward statement will be 40,000, and it is 40,000 that will be classed as her best year of her final 3 years. All right. However, where it will affect it is because your pension is based on your membership years, okay, and your reckonable membership. So therefore, if she works a whole 12 months, she hasn't actually done 12 months, has she? She's only done 6 months because she's been part-time for that period. And so many of you, when you familiarize yourself with your total reward statement, as per the bottom bullet point, you have calendar length membership years, and ladies, you will see this more often than not because of children upbringing, etc., going part-time, 2-3 day weeks here, there, etc. Your calendar length membership is usually, say, for example, 25 years, but your reckonable membership may be 21 years because you've been part-time for so many period of time. Please look into this. Please look into this. And I've put the website address right here. And I know these slides will be passed on to yourselves. All right. But yeah, NHS winding down, put it in there, Google, it'll come up. The positives winding down. You remain employed. You're in a permanent position. You can go potentially increase your working hours afterwards. You've gone from a 2.5 day week, realize you can't afford it, go back up to 3.5. You remain paying into a very good pension. You keep your death in service. You keep your sick pay benefits, 6 months full, 6 months half. We know with COVID, actually, there's unfortunately a lot of your distant colleagues out there who've been affected, maybe yourselves even, who that alone has been gold dust to them. They have had the peace of mind. They've got a guaranteed income, although they are very poorly through what's going on. And it doesn't have to be COVID, by the way. It is sick pay that you've got 6 months full, 6 months half after 5 years service. You remain in control. You continue to receive a steady income. And it's definitely, as I've said, an option prior to retire and returning. Please bear that in mind. So what we've been trying to do in the last 30 minutes is just try and give you enough information that you can start taking control of your finances. The first one I certainly say, do your income and expenditure. All right. Be patient. Be patient. Familiarize yourself with your accounts, income and expenditure, fraud awareness. I'm going to just touch on that for 1 second in a minute. Review your protection. Review it annually. Review your finances at least annually. Look at your estate and legacy. Have you got the right will in place? People with blended families, are you protecting the right part of the estate? Have you got a lasting power of attorneys in place? These things alone have really shot up in awareness of people out there because of, unfortunately, the circumstance we are. Understand your pensions. Peel off your total reward statement. Get your state pension forecast. Request your private pensions that you may have from previous lives. Get familiarized with those. Maximize the staff benefits, maximize staff discounts, better in your back pocket than anybody else. And please just think save, not spend. I'm not boring, I can promise you that. I'm definitely not boring. But actually, are we buying things on impulse? Are we being biased? Are we letting the emotions get the better of us? Sometimes, as I've said, just sleep on it. All right. Fraud, though. This is huge. And unfortunately, over 50s are hit the hardest. Doesn't matter what gender. You are being hit the hardest. That's what the studies are saying. And actually, I peeled this off today based on that webinar I was on, and alone over 11 million was fraudulently taken out in the month of July in this country. We know, unfortunately, public sector are more at risk, purely because you don't really want to take advice, and therefore you're looking maybe potentially for shortcuts, i.e. the DIY event. Be very conscious, be careful of what you're doing. If it's too good to be true, it's generally too good to be true. I've copy and pasted a blog at the top there. Now, this is NHS relevant, and it has had really good positive plaudits out there. I've kind of borrowed it from Cambridgeshire Gov, and I'm passing it over to yourself because actually that is relevant to the NHS and what a lot of you may be doing working in the community, for example. And it doesn't even matter if you've got family or friends in a vulnerable case, even yourselves, please read it. But if you identify anything that's fraudulent for yourself personally, for your adult parents, children, colleagues, actually patients, please just go straight to action forward line. All right, please do that. Right. So finally, should you take independent advice? I'm not telling you to take independent advice like someone like myself. If you want to, that's entirely up to yourself. What this is trying to say to is this biasism. Please have an impartial thought process going in there. Partners and spouses can be supportive, and obviously if it's absolutely that's their game and they understand this world, that's great, that's not a problem. Understand it. But actually having a third party, someone non-biased, maybe something removed from the whole family event who you can trust or build trust with to look at your finances and put you on the right path, that's actually worth its weight in gold. Some of you are going to be making some massive decisions, and you want to make sure you're in the right frame of mind to do that. And the last thing we want you to do is be a victim of that fraud side of scenario, but we want to make sure you're making the right decisions financially. All right. Be very conscious of the difference between information and advice. Advice is a complete regulated entirety. Information or guidance is not advice, and that's more directional in the sense of, have you tried this or maybe that. Advice is, look, this is what we're advising you to do, and do it that way. All right, based on a lot of factors and meat on the bone to build that picture and why that advice is given. So please look into that. Aftercare service, as Carla would support, we, and maybe some of you listening today, we were always happy to talk to you offline. Obviously, I know I'm more than happy to speak straight after this. I know we still got time on our side, but if you want to talk to us offline, so to speak, please info@eulogie.co.uk. And look, thank you, but I want you to walk away with just a couple of things. First of all, action plan, your financial action plan. Be honest about your relationship with money. Understand that. That's a big obstacle and a hurdle to get over. Complete a budget planner, income and expenditure. Begin to understand what is going on. How come I'm leaking all this money on a monthly basis? Preparation. You may have heard that. My granddad, preparation, etc., etc. Total reward statement, state pension forecast. If you can get those two, you're putting yourself on the right tracks to making some good, rational decision. Share your thoughts. What do you want? What is your aims, your objectives? Do not follow the herd. Just because everybody in your department has taken the larger tax-free lump sum doesn't mean you have to. It doesn't mean anything at all. There is no right or wrong answer, everybody. It's what's right for you. It's the key concept here. Be fraud aware. Report anything that you see or see as suspicious. Ask for assistance or advice. And this is all about you taking control. Definitely say financial control. But look, thank you, everybody. Thank you for listening. I hope that's helped you out in some way. I've kind of talked very quickly for bang on 33 minutes. But over to you. Any questions, Carla?
There is, Neil. Yes, thanks ever so much.